Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to discuss the disappointing earnings report from Disney and whether this potentially indicates some worrying times ahead. Plus, a little bit of a recap of what's happening with the US midterms and the crypto chaos. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So, as you know, those of you who joined me yesterday, we discussed that Disney was going to announce their earnings after the US market had closed. And there was a lot of anticipation for Disney earnings because the previous earnings report was very positive. So there was a lot of hope on this. And especially as a few weeks ago, Netflix released their earnings reports, which was very, very positive. So there was a lot of anticipation to see some positive stuff coming from Disney. But the earnings were very disappointing. And this has really had an impact, obviously, on their stock price. Now, their revenue was announced at $20.5 billion versus $21.26 billion expected. That's a big miss. That is a big miss. Because don't forget, a lot of time when we do these earning reports, they're missed by, like I say, a little, by a fraction. But that's quite a big miss. $20.5 billion versus $21.26 billion expected. Subscribers was slightly better to the new Disney Plus. Subscribers net additions rose to 12.1 million versus 9.35 million expected. But their parks, experiences, and consumer products revenue was announced at 7.43 billion versus 7.59 billion expected. And this is where I'm saying this is possibly a worrying sign to come. Because to be fair, their theme parks is really suffering a lot from recession concerns. Don't forget, after COVID, they had a big boost in the amount of revenue being generated from their theme parks, because obviously everybody had been locked down and needed to go out and see, Mickey Mouse and have some fun. But that's dropping off. And there's a really good sort of sign that there is clearly concerns in the public's mind about recession, and this is affecting the consumer. Now, the other thing is their expenses towards Disney Plus is obviously also costing them, because obviously, though they own all the content, because it's Disney, they own Fox, they own, you name it. All the content they have on it is owned by them, but they're producing an awful lot of new shows as well, and an awful lot of new sort of movies and things to run on the streaming service. Now, Disney Plus Hulu, which is owned by Disney, obviously, ESPN Plus lost a combined amount of 1.5 billion. Lost 1.5 billion. And that is versus the loss of the previous report of 1.1 billion. So their expenses is going up. Now, Disney Plus obviously is their big flagship. And they are, like I say, really using this to challenge, obviously the other giant, which is Netflix. Netflix in this earnings seems to be the only one doing quite well, because Netflix was quite positive. Paramount and HBO were very disappointing as well. So there is signs that obviously, the streaming service is beginning to, because it's saturated, there's beginning to be, signs that certain people who were late to the game, like Disney, like Paramount, like Warner Brothers or HBO, are maybe a little bit behind the curve. Now, Disney Plus, to show they're behind the curve, is obviously looked at Netflix's ad revenue or ad-supported tier or ad-supported accounts, which they launched over a month ago in America and Canada. And they're about to launch it across the board in many other countries. Disney Plus will be launching their own version of it. And it'll cost £7.99 per month and be released on the 8th of December. So they're hoping, obviously, this is going to bring in some additional revenue for them. They're copying Netflix's model on that. Now, Disney CEO, Bob Chapek, he said, this is what he has to say to the board. We expect our DTC operating losses to narrow going forward, and that Disney Plus will still achieve profitability in fiscal 2024. Don't forget, like I said, they've spent an awful lot of money on obviously setting up Disney Plus, but on the content. Even though they own it, they are producing an awful lot of new shows, both like Marvel shows, Star Wars shows, Disney shows, you name it, sort of animated features, you name it. So they're spending a lot of money. So they're not expecting to make any money back on Disney Plus to 2024. But here's the worrying thing. He went on to say, assuming we do not see a meaningful shift in economic climate. In other words, if we don't see recession and changes in the economic climate. So already they're saying their parks are suffering and their product line is suffering because obviously consumers are not buying or spending as much money as they used to be after COVID, down to the fact they are concerned about the future economic climate, but he's also backing himself up. He's also saying at the same time, though we expect to be profitable by the fiscal year of 2024, we will be unless we fall into recession. So this is another company, again, saying worryingly that recession is potentially on its way. So again, that is quite a worrying sign indeed. On the back of this, Disney share price roughly dropped by 7.14% in pre-market. And let's have a quick look at Disney now, actually, on the chart very quickly. As you can see, like I say, it's in pre-market. It dropped 17.14. It closed yesterday at 99.76. It'd be interesting to see. Obviously, we're going to see a gap, no doubt, when it opens, when the US session kicks in. But it'd be interesting to see how much the market really starts to panic on this. So, yeah. Anyway, something else really exciting I want to share with you. I want to talk about the midterms, what that means to the market at the moment, plus the chaos happening in the crypto market, excuse me, at the moment. But before I get into that, let me just share with you something which I think is just as exciting. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
There we go. Indeed, tonight is the next episode of obviously the Trading School. Tixee Live presents the Trading School tonight at 6 p.m. UTC. Tonight's subject is something I think a lot of newbie traders or people who've been trading for a while don't really focus a lot upon. I think a lot of traders tend to get obsessed with technical analysis, with fundamental analysis, market sentiment. But one thing they don't actually focus on is themselves. Because I think psychology in trading is a massive driver. Be able to control your reactions, be able to understand why you're making certain trading decisions, and in controlling your passions as well, so you can be a more rounded trading decision instead of reacting on like fear of missing out or the hope and fear scenario. So yeah, tonight's episode is going to be called "My Behind the Market." It is a subject I am pretty passionate on. And I do talk about it a lot because I think it's a major area a lot of traders overlook when they're studying trading. They don't really focus on it. So yeah, we will be doing a psychology of trading, mind behind the market. So please come and join me for that. Remember, these aren't broadcasted on YouTube. These are still live because it's Tixee Live still. And live means live. But to click on this, click on the description, the link on the description below, and you can register and come and see me and my colleague. Don't forget, there's two of us, my colleague Stefanos, and we'll discuss tonight's topic at 6 p.m. UTC, and I hope to see you all there. Okie doke. Right, moving on. Okay, so yeah, like I said, we did a lot about the US midterms yesterday, a lot about how the market was extremely optimistic on it as well, and the market is hoping, like I said, for a gridlock, i.e., And a good question here. Hi, James. Do you think a slight decrease in the monthly subscription is going to be a popular choice, meaning you have to watch ads on TV and skip the intro, laugh out loud? So I want to keep it as it is. It's a cheaper version of it. And for Netflix, and this is a good question, by the way, for Netflix, it's proven to be very popular. So what's good for the goose is good for the gander, I guess. I guess Disney's looking at it and going, we'll go down the same route as Netflix because it's working for them. It's going to work for us. However, the question is, don't forget, the only problem is, and this is a lot of reason why a lot of social media companies are also struggling at the moment, the likes of Twitter, for example, what a disaster. Facebook, for example, even Google Alphabet is struggling, is because the cost of digital advertising online is waning. Okay, so there is that issue too. So that could play a part on the streaming service as well. So it'd be interesting to see. But at the moment, it's working for Netflix. Disney Plus obviously wants to do the same. So only time will tell if it is indeed successful. It could be just a short-term boost where people go, it's cheaper, I'll go for it. But then after a while, they get annoyed with the ads and they go back to the original model. So we will have to see. We'll have to see. Anyway, like I was saying, the market is hoping for a gridlock, i.e. not control in one way or another, with both parties pretty much evenly split, because that way the change in fiscal policy is very, very, very difficult to do, which the market quite likes. It likes the stability of having things being difficult, of getting new policies through, especially with Democrats looking at the debt, the overall US debt, plus the chances of the Democrats wanting to pass tighter regulations on the tech sector, which of course, if there's a gridlock, it'd be very difficult for them to do. Now, the Republicans are indeed set to win the House, but the Senate is very, very, very close. Very close indeed. At the moment, as it stands, the Democrats have 48, Republicans have 47. And then don't forget that the cutoff is 50. The House-wise, the Republicans definitely looks like they're going to take over the House. Democrats 173, Republicans 198. So obviously the market is hoping for a bit of a gridlock on this. The only thing I'm thinking of, which we could do a potential change, if we get more Republicans in the House, we're going to potentially get a lot more comments in reference to the Fed's obviously tightening policy at the moment. A lot more comments about that and the Fed being independent. The Democrats are very keen to keep the Fed independent, but the Republicans have said in the past they don't like the fact that the Fed is independent, and they're going to make a few more comments. But anyway, the market's hopeful. We're going to get a gridlock. And the question is, of course, is the S&P going to have a fourth day of gains? So we'll have a look at that when we look into the market in a minute. Something else I want to talk about now, which is the total crypto chaos we're having at the moment. Total chaos. Don't forget, over the weekends, Binance, which is the biggest crypto exchange, they said they were going to sell off a big chunk of the FTT coin, which is the other exchanges, FTX exchanges sort of own coin. And of course, the whole market has gone into very, very nervous territory. It's changed now recently to try and increase a bit of liquidity and a bit of stability into the market. And that's Binance has required the rival exchange, FTX. Now, like I say, it's the biggest exchange in the crypto world. And of course, this question is being asked because Binance is the biggest. Their rival was FTX. Did they eliminate the competition by tanking the FTT coin? Is this something which they were able to do? Obviously, if it's something like a rival bank in the banking sector or a rival company, which is obviously this is in a regulated market, which was an attempt to do something like that, it'd be very, very difficult for them to be pulled off before the regulators get to them. Obviously, we're not in a regulated zone with crypto. So that is a question being asked. Did they do this because they can, and they wanted to require their competition? Anyway, the knock-on effect is not just obviously for the FTT or obviously FTX in general, but Bitcoin and the other cryptos have really suffered. Bitcoin, in fact, has fallen by 15% over the last 3 days, hitting a 2-year low, trading at levels not seen since 2020. So let's have a quick look at the market now. And there's a couple of questions I want to ask about this, because there's something else we've noticed because of this outcome, what's happened over the last couple of days. Now, as you can see, Bitcoin now is currently trading at $1,000. $767. Before this outcry, it was following stocks. It had a bit more a risk-on appetite because of the NFP result and the good mood we've had in the market since Friday. And it was trading around that key level of $20,355. But since the weekend, since this mess, it's come under a huge amount of pressure. It's currently trading at $17,660. Sorry, $17,665. So again, the question is being asked, like I say, it's no longer correlated with the stock market or with the S&P, because don't forget, it's a risk-on asset. What we've seen in the past, when we've seen risk-on appetite or a bull market, crypto has benefited. It's not benefiting now because obviously the market is highlighting the dangers of this crypto industry. So that's where it's suffering from now. If we have a look at a couple other things, let's go back to the S&P 500. Like I say, it's obviously trading slightly sideways on the 30 minutes, but if you look on a daily, again, the question being asked, can it close on a fourth day of gains? Currently trading at 3,809 points, above that ratio of 23.6 on the Fibonacci on a daily. I wonder if it can hold above that. But at the moment, like I say, we're still focused on the midterms. If we have a look at, say, the euro, yes, it's staying above parity at the moment. Currently trading at 1.00563. For me, the area I'll be keeping an eye on, if it does start coming under pressure, will be the 23.6 ratio. Potential area of interest, 1.00089. If you look at the cable as well, cable, again, now under the 115 handle. So we're seeing a little bit of dollar fight back at the moment. Currently trading at 1.4491. If we have a look at gold as well, again, wow, like I say, it tried to challenge potentially that area of interest of $1,726. Currently trading a little bit lower now. So I've seen a little bit of dollar trying to get back a little bit of dollar gains. $1,708 currently at the moment. So yeah, there we have it. Like I say, big events to come up though. Don't forget the midterms. Okay, the market's looking at it a bit at the moment. However, they're going to forget all about that tomorrow. Because tomorrow is the big one. US Consumer Price Index. We can potentially expect fireworks. If it comes in hotter, so excited I had to have a swig of water. If it comes in hotter than expected, then potentially will we see the market come under pressure again? Will the happy feeling the market's been feeling over the last couple of trading days disappear? Don't forget, last time it was supposed to come in at 8.1. It came in at 8.2 year on year. Core was supposed to come in at 6.3. It came in at 6.6. Frightening. Now, obviously tomorrow, expected for year on year to come in around about 8% to 7.9, but core is still expected to come in at 6.5. So yeah, this is going to be potentially a major event, and I will be doing a watch along for this event tomorrow. So please come and join me. Other things on the calendar, of course, we have US initial claims tomorrow at the same time, actually, but it's going to be, overflooded by CPI, UK GDP, UK manufacturing production, German consumer price index, and US Michigan consumer sentiment as well to come. Don't forget, you can ask me questions a watch along. Yeah, I like the watch alongs as well, especially if there's a big event in the market and it moves the market. They'd be quite exciting. The European equities as they currently stand. Okay, FTSE in the red, negative 0.48%. DAX currently trading also in the red, negative 0.66%. And US Stock 50 currently trading negative 0.48%. Don't forget, you can ask me questions anytime, or just simply say hello if you like. Or let me know your thoughts on the matter. What do you think? Are you excited about the CPI tomorrow? It should be good. It should be a really good, potentially a really good event. Because I say the market's been waiting. Okay, the market's been distracted with the midterms because there's nothing really else to talk about, till tomorrow when the CPI comes out. But in general, it should be a really, really exciting event. I definitely will be doing a watch along. I'm excited about it. Last time I've done the CPI watch alongs, we've seen really big movements in the market. So it's been really exciting. So I am looking forward to this, definitely. Nice one, James. Be an exciting week for sure. I certainly have no doubt it will be. Thank you for coming along. I hope you're well. Okay, don't forget, if you think of a question later, you can put it in the comment section either on Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which will be, obviously, because I've got the training school tonight, will be tomorrow morning at 9 a.m. UTC, or 9:30 a.m. UTC, actually. And again, tomorrow, of course, for the watch along. So please come and join me for that. Okay, if there's no questions, like I always say, if you watch me on Facebook and you enjoyed this little video, by all means, give us a follow. And if you watch me on YouTube and you enjoyed this little video, subscribe if you like, hit the notification button so you know next time when I'm going live. If you enjoyed this video, find it interesting and useful, and you put up with me, my over the top enthusiasm for the market, I simply cannot help, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.